Good day, everyone. This is Patrick from EasyFX Code Trading System, and it's Saturday, the 27th of November, 2021, and this is the weekly technical analysis for the Euro, the cable, and the Aussie dollar for the first week of December. And let's begin with the Euro, where yesterday on Friday, you can see a strong bounce. Recovered from 112 back through the 113 and retested the weekly pivot at the 113.32. There's the high 113.31 here, but yep, within one pip of the weekly pivot, and then pull back slightly to close for the week. But at the start of the week, it was bearish from the start, Monday, and drifted lower till the 112 level, and finally found support at 112. Did not reach the next lower support, where there's a confluence of 2 pips lower there, as well as a swing low area. Yes, from May of this year. So it dipped lower all the way after making a high for the year. Actually, it's the May of last year. Okay, that's this on the weekly time frame. So while we're here, let's see the weekly time frame close as a spinning top, small bullish body, so it could try to recover somewhat next week. And that was because of close above the open for the week. But it hit the 138 pip extension here. It could try to climb back up to this resistance zone that we had marked last week, back to 113.78, before attempting to reach 114. So we'll see. Anyway, it's quite a ways down from the monthly pivot, which will close in couple more days next week. So monthly pivot was at 115.93, and it's tumbled all the way down to the 113 now. So this followed a couple of weeks of weakness and dipped lower to finally find some support 112, and it could try to recover somewhat, but it's going to be limited. Still weak overall. And this week there's only some minor news of the final manufacturing and services PMIs, but there will be some fundamental reason on Friday with the non-farm payroll report coming up. So from the start of the week, it was US dollar that was strengthening until the risk-off move on the Friday, where the stock market took a dive with some fears of the new coronavirus variant, and that's the term as the Omicron variant now. That's the 15th letter in the Greek alphabet, and it's still early days, but markets are wary of those of potential future lockdowns and businesses that could be affected with those as well. All right, let's take a look at the US dollar index. And it was driving up higher right from Monday. It broke through the 162 fib extension. That was previous Friday. So it was going to extend, and it did go higher, but right up to made a high of 96.87 before slowly pulling back. But then Friday it just gave up a lot of gains for the week and extended below this 162 fib extension again. So this could be a bit of more bearish move to test this 138 fib extension, and we'll see if there's going to be consolidation after that, or if it's going to break through lower. So that's going to be a critical area for support for the dollar for next week. And just to remind you all, this pink or red line here that was coming from this swing low from also May of 2020, where it broke through higher the previous week and attempted to climb up. Again, this also from the past 2 weeks a bullish move, and then pull back lower, and it looks like it closed as a doji, almost a dragonfly doji, which is quite bearish. So there's definitely going to be some bearish momentum bring it down lower. So this is just the inverse of the euro dollar, where for the couple of weeks it was falling and then managed to find support. Okay, let's move back to the euro dollar here. So we may be able to remove some of these fibs so that we just focus on the critical one now. Now that it has broken down lower. Could also use, it could continue lower, but later on as it's after a pullback. So for now, it's, yeah, the 200 fib is still there, just below this swing low. Or if we go back to this continuation move, it's also sitting back at the 162 fib, and we used that original fib here. Let's just mark this in blue again. Let's change this color here. Okay, that's still that same support level. The 162 fib is at the 111.41. So we'll see if it's eventually going to move down lower to that area. So, but for now, this coming week, there's still some bullish momentum. Whether it's going to break through 114 is to see how that pans out next week. If it does, it could be the following week in December, where it could try to test the 162 fib there. And also coming up on Friday, that's the non-farm payroll report. So if this is strong, and this could bring the euro down lower as well. Okay, let's move on to pound, sterling pound pair with US. So there's the cable, and it did start weaker as well, but this time, yes, cable was not able to recover as much as the euro. So it dipped into the support zone just at the 133 and dipped slightly below that. And closed as a spinning top on Friday. But it was bearish from the start of the week, falling from the weekly pivot of last week, 134.51. All right, so this week we could see some continued retracement back up, but there's a strong resistance at 134, and then we'll see whether it consolidates or whether it continues lower. And that's will depend on the Friday's non-farm payroll report as the main trigger for next week. And perhaps target the 138 fib extension that's at the 132.51. So that will be a key support level. If that breaks, the next target will be the 162 fib extension, and that's another 100 pips lower at the 131.51. Right, so for now, we'll see how that unfolds for next week, especially the early part of next week, as the news of the new variant is unfolding, and especially when UK has also reported cases coming in from South Africa. So that could be further bearish headwinds for the cable here. Yeah, on the weekly time frame, we've already seen that it could be further bearish momentum, so that's definitely possible. All right, let's move on to the Aussie dollar. And Aussie dollar is the one with the more bearish scenario, where it did not retrace or pull back at all on the Friday, whereas quite different from euro and the cable, and it has fallen through the key support at this swing low. It started right from the start of the week and started drifting lower from the 78.6 fib retracement and continued to break down below the 72. Now, next key support is going to be at the 71.71. That's the next swing low level. So this swing low at this 100 fib, that's going to be key resistance. Now that is support has been broken through. So this is looks very ominous for the Aussie dollar, and because on Friday, spot gold as well fell hard, and well, it spot gold had been falling from the start of the week, so that has put a drag on the Aussie dollar as well. On the weekly time frame, it's already 4 consecutive weeks of weakness. Coming back to test this swing low area right at the 71. And it could very well extend. If it extends, then it could target the 138 fib. And that's at 0.7023. So just above the key 70 round figure level. Okay, back to the daily time frame here. And we'll leave this fib here for now. I could also extend all the way down here, but I think for now we just leave it first. And see whether it will test this swing low. We could mark that swing low, but I think that's fine. Key round figure will be the critical support. This Wednesday, there's the Australian GDP figure, but also Friday is exposed to the non-farm payroll report from the US. So critical time for the Aussie dollar. Okay, so do check out my other videos on spot gold and dollar yen, and have a safe week and have a good trading week, and cheers for now.